Welcome to Wealth Preservation Solutions. I'm Elizabeth DeLeo, Director of Family Offices. Kevin Ellman, CFP, our CEO, is joining me again today to talk about some things now that the election is over, to just try to bring some things to light and to the surface that we've been hearing through conversations with clients and partners alike. Good morning, Kevin.
Good morning.
How are you?
I'm doing pretty well, thank you.
Good. It's what we like to hear. So, while it was a little bit of a longer election day, if you will, than normal, I can't say than we anticipated. I think we all probably anticipated the election day to turn into a few days. Here we are. And for the most part, the election is settled. So what sort of things have you been speaking with our clients about that are, relevant now that we're past the decision-making point?
Sure. Well, the operative word there was for the most part. It's possible that there could be some surprises, but it certainly appears like we're going to have Biden as president. We're going to have a Democratic House and probably a Republican Senate. Mm-hmm. So that means we're going to have a divided government. Mm-hmm. Now, some people might feel, well, they didn't get their way, but the truth is, if you look back historically, divided government is actually good for the stock market. Mm-hmm. So post-election, post a divided government result, the stock market has actually done better than all the other combinations, either Republican president, Democratic president, et cetera. So based on that alone, we're optimistic about the balance of this year mm-hmm. and going into next year.
Mm-hmm. And why do you think that is? Why do you think that, people who don't necessarily always agree provide for a better turnout in the market performance?
Well, I think that neither party can be too extreme in their policies. Mm-hmm. So one of the things that everybody was worried about if there was going to be a blue wave sweep is that taxes would go up dramatically and regulation would increase dramatically. And while it's possible that certain taxes may go up, particularly the estate taxes probably will go up, but it's going to be hard to get anything too extreme passed. So it looks like the president's going to have to govern towards the middle. We'll have to try to seek compromise. And the big thing is that most investors want to know at least pretty good idea what's going to happen. And they don't like nasty surprises. Right. So just really going by history, that has been a historical record that post divided government elections, the stock market does better.
Right. So really what you're saying is that, markets prefer certainty, right? And so what's interesting to me is, something that I've always really relied on is the understanding that time is our biggest asset. And it's not something that we can replenish, right? Once it's gone, it's gone. But it's something that we have ahead of us. We never know how much, but it is something that we can look forward to. And so right now, we're on the cusp of the president-elect being decided. Now, there are a few things left, that remain in terms of the absolute final decision of the election. But, come January, things might take a shift, right? And can you just spend a minute talking about, the runway of time we may have before any of, let's say policies that are being presented might actually come into play? Because I think that's where people, you and I being on conversations with clients, that's where that's where their concern lies, is how much time do I have? And none of us have a crystal ball, but what's your take on that?
Well, it seems that the biggest concern is what's going to happen with taxes.
Right.
And it certainly seems it's a pretty good chance that taxes will go up. I don't know if they're going to go up as high as originally projected, but they'll probably go up. And while I don't know for sure, they probably will be effective January 1st. So if someone was particularly worried, they might want to make some moves today. Mm-hmm. The big tax issue that I think we should be alert to is that most likely estate taxes will go up.
Right.
So if you're a family that's in the bracket where estate taxes are concerned, then focusing on your plan, at least reviewing it before the end of the year, might be smart. Right. Now, the other big thing that happened this week is the potential, it looks like a very good potential of a vaccine. Mm-hmm. So, in many ways, that's almost a bigger factor.
Right.
So, I read a phrase the other day in the paper that said the economy has been in a medically induced coma.
Oh, well, we have been.
Very good description. Because
yeah.
Most of this has been a medical problem.
Right.
And if we can get a medical solution like a vaccine, and then maybe a a cure,
Right.
then I think the market will take off.
Yeah.
So
Well,
I
the
almost
economy will drive that, right?
exactly. So I think that's going to be a bigger factor. So if we had a
Right.
vaccine and and people could start going out and traveling, the restaurant industry,
Yeah.
movies, theaters, hotels, airplanes.
Yeah, all the things that have been stunted.
Yeah. So I think that's a bigger factor, and there's a hint. It's not final, but there's a hint that there's a solution on the horizon.
Mm-hmm.
So I think those two reasons, in my mind, divided government on one hand, vaccine potential on the other, and then in the background, we have the Federal Reserve determined to maintain, easy money policies.
Right.
So you put all that together, and it sure looks like the economy and the stock market is going to go forward for the balance of this year and into next year.
Right. Well, here's to hoping. And maybe, just maybe, one day you and I will actually see each other in person again. Do you have any final thoughts for our audience before we say our goodbyes?
Well, I think we should basically stay the course.
Yeah.
So I still believe we should have a balanced portfolio. We should have growth and value, U.S. stocks and international. And even though this last week technology took a little bit of a dip, I still believe strongly in technology and all of the mega trends that are in place. So I would stay focused on a growth portfolio and stay invested and don't freak out.
Okay. Well, I will take that advice, and hopefully everyone listening will too. Thank you as always for sharing your outlook. And to everyone watching from our family to yours, thank you so much for taking the time. We hope that you found this helpful. To get in touch with us, you can email Kevin directly at kellman@wpsllc.net, or you may text us. You may text WEALTH to 88799. And as always, for more information, you can visit our website, which is just wealthpreservationsolutions.com. We thank you again. We look forward to seeing you next time. Until then, stay happy, stay healthy, and stay wealthy. Bye.
Bye.
For your free copy of Kevin's book, The 7 Biggest Money Mistakes People Make and How to Avoid Them, just text WEALTH to 88799.